Welcome back into another episode of the podcast. We're going to dive in, interestingly enough, into ETFs and XRP because of all the new announcements this week at Swell. You don't want to miss it. It's going to be a good one. Let's kind of start off with the fact that while Wall Street was still digesting Bitcoin's $60 billion ETF success story, there's a new race that has begun, and it's really not Ethereum, but it's more around XRP and the cryptocurrency that really took on a regulatory hell. This, of course, has started to shift dramatically. Now, some of the things we're going to talk about today is Canary Capital, who filed an updated S1 for its ETF. And this, of course, was all about removing the mechanism called the delaying amendment. And it's targeting November 13th as the launch. Now, there's a lot of issuers that have applications pending. That includes Bitwise, Franklin Templeton, 21 Shares, Grayscale. All of these will get into it. Now, where the stakes get set around this is really on the broader basis and the success of what we saw with the Bitcoin ETF, which was 628 million in the first day. All right. This, of course, compares out to the ETH ETF, which was 106 million in the first day. So could we see a competitive landscape surfacing around XRP and an explosion onto the market? The first mover, of course, is going to be Canary Capital, who've leveraged the same auto effect mechanism that Solana, Hedera, and Litecoin used for launching. And, they launched Hedera and Litecoin. And the fact that they've got first mover strategy and advantage, I think, is a big one. Now, don't forget, we've still got Bitwise, Franklin Templeton, 21 Shares, Grayscale. All those, they've not, to my knowledge, they have not updated their filings. It may have happened just recently. But the point being is that this is starting to get heated very quickly.
Absolutely. We think there's demand for exposure to a large number of those altcoins. I think that you'll see assets like XRP and other major assets get their ETFs relatively soon. We've seen filings from the SEC, not talking about any specific filing, but we've seen those moving through the system. We're going to wake up in 6 months and investors are going to be able to use high quality, low cost ETFs to access the top 10, maybe top 20 ETFs. And then the next exciting thing beyond that is you're going to start to see ETFs that package those together in diversified exposures. Those index-based ETFs, I actually think could be one of the surprises of the market. I could think they could be, bigger even than the Ethereum ETF. So there is definitely more coming from Bitwise. We've entered the ETF era of crypto, and I think that's a very good thing for investors.
Now, Bitwise is a little different because remember, they filed their application in October of 24, already offered successful Bitcoin and ETH ETFs. Then BSO comes out, huge opportunity. It led with 10 million in the early volume, and it could reach 3 billion in inflows. Matt Hogan, who's going to be coming on the show, predicted that the XRP ETF, though, could easily become a $1 billion fund within the first few months of launch. Now, Stephen McClurg is going the other direction. He thinks it could be 5x of that. So a significant difference in how this could play out. The established players are pretty consistent. Franklin Templeton, traditional asset manager entering crypto. Grayscale, already the XRP trust infrastructure. 21 Shares, European expertise, pretty much the ones that kind of play it out. But I think currently we're talking about 20 XRP ETF applications that are pending in the U.S. SEC office. And of course, all of this really boils down to who is going to win. And I think this is where it gets interesting because there are so many factors that play into this. Think about the ETF for Ethereum. This is more of a smart contract story. They go out, the net flow, 14 billion, utility narrative versus store of value, which is the Bitcoin play. You also compare this to Solana, who's kind of the new kid on the block. They're crushing it. And of course, they could pull 3 billion in the first 12 to 18 months. This is coming in from Bloomberg Intelligence. And then you've got BSOL, which had its best ETF launch of 2025. So you can kind of see it's lining up, hopefully not thwarted by where the market is, because it will all depend on that. But the big difference here for Solana that I think will possibly outdo the Ethereum ETF is just the staking advantage that they're bringing, which right now is up to 7%, which attracts a lot of institutions. In comparison, you look at Solana's ETF, I think it attracted almost 15 million in fresh inflows for their first sixth consecutive day. And we saw Bitcoin and ETH on outflows. Now, where XRP's positioning becomes very unique is this. Solana's market cap, 5% of Bitcoin, okay? 22% of Ethereum currently. XRP's dedicated investor base, you know who you are. It's the XRP family, formerly known as the Army, according to Brad. And then, of course, you had the early Rex Osprey XRP ETF, which launched 6 weeks ago, already crossed 100 million. All right, so that's just one thing. But institutional utility versus retail speculation is going to be the narrative here. It's going to be the one that I think advantage goes to Ripple. This is why I think XRP outshines them all. Ripple raised $500 million in funding. They just announced this at Swell, lifting its valuation to $40 billion. This was led by Fortress, Citadel, and Pantera Capital. Galaxy Digital was in that. Brevon Howard was in that. Marshall Wace was in that. We're talking about the legends of Wall Street that are now behind Ripple. This represents more than a 263% increase from Ripple's previous $11 billion valuation. That was just in January of last year, 24, guys. So this is insane in terms of the not only the acquisition cycle that Brad and team have been on, but the potential here for where this could go, because there's a lot of institutional partnerships that are, kind of bounced around the industry. But this one that we're seeing develop under Ripple is unstoppable, in my opinion. Ripple also announced their partnership with Mastercard. This is going to pilot a blockchain settlement for fiat-based credit card transactions. Huge. Probably the biggest story coming out of Swell. And then, of course, you have BNY Mellon, who were appointed as primary custody for Ripple's operations since July of this year. They've also partnered with 100 financial institutions globally, 300 financial institutions. You know the drill, that have joined RippleNet. SBI Holdings, Bank of Japan, American Express, Standard Chartered. I mean, the list just goes on. But the network right now processed 1.3 trillion quarterly in volume. This was in Q2 of this year. You look at the real world utility that plays into this. You look at total payment volumes processed through RippleNet. You look at the stablecoin integration, which crossed 1 billion in market cap. Then you look at the corporate treasury play, all built around G Treasury, which was $1 billion. That manages trillions of dollars in Fortune 500 companies. Now, I've talked about this in a previous episode, but the point is, all of this is layering in. Now, I know a lot of people will say, well, Paul, this is all going to depend on Ripple's capacity to execute. I totally agree. Execution will be the key and most pivotal point for Ripple making it to the next level. The other thing that you have to consider right now is where the market is, because if we get a downturn, this will be a test, because if we get a crypto winter that could be, a few months or as much as a year, depending on how next year the economic framework plays out. This is a test that will, I think, Ripple flies through, because retail will get a little bit more skittish on both Ethereum, I anticipate on Solana. But when you get into institutional scenarios, it's a little bit of a different game. So think about it this way. Ethereum experienced approximately 5.5% correction with ETF outflows. That was like 81 million, okay? You had institutional behavior during volatility with the ETH ETF. What separates them, and I say Ripple, from the others, possibly the losers, is you look at positive inflows, and this is with Solana, even as Bitcoin and ETH bled capital. So compare that, and then look at the brand strength that matters around all of this. This is a thing that I think flight to quality in crypto ETFs will be big. Now, sure, staking yields are a downside protection. There will be some things that I think are resilient for XRP, which is the flight to quality, and that is the utility-driven demand. Sure, there's going to be speculative trading, but also the regulatory clarity that they've already got in place. And then now all this institutional infrastructure that is playing into this. So corporate treasury use cases, providing a price floor that could just absolutely rip. This is going to be huge. Who are my winners when it comes to the first 6 months? Because you got to look at all the players here. Who could possibly be the ones that really win? I think I have to give the first mover advantage to Canary Capital. They are the first mover. We will see a November 13th target launch for the ETF. They have a proven track record with Solana, Hedera, Litecoin, and they're very nimble. And I've had Stephen on the show many times, very nimble, but it does not necessarily mean they win. But it does mean they have the first mover. And in most cases with ETFs, first mover has been a big deal. The dark horse is Bitwise. Bitwise could easily become $1 billion fund within the first few months. They have a huge distribution network. They also have crypto native credibility, which could be a play for the XRP family. And they could win on a total of assets, even if they're not first to market. So, big deal right now on these two going head to head. The other thing that you think about long-term institutional play, why any XRP ETF could exceed expectations, and I think the big K here is just the advancement of the $500 million investment at Swell, Ripple's $40 billion valuation, the real utility driving off of transaction volume now coming in from institution. This is what institutional capital is looking for. That's the confidence that they put in behind projects and companies like Ripple. So it is huge. The race is about to heat up, and I think we are in for a very big next few weeks and possibly all the way into Q1 of next year. This will determine how crypto is looked at by institutional capital and possibly traditional finance. You guys don't want to miss any of that. We're also going to get a quick interview with the Hedera team, who just launched their ETF with Canary as well, to try to get an insight on where all this goes. And one of the things we've been watching, of course, has been the birth of a handful of ETFs that have started to make their way onto Wall Street. One of them is the Hedera ETF. So joining me today is Greg Bell, who is the Chief Business Officer over at Hedera Foundation. How are you?
Doing very well.
All right. Well, Greg, let's get into it quickly. I know a lot has happened with Hedera. And if you think about just the ETF launch, we'll go with the Canary, and I think that was October 28th. So it was one of the first altcoin ETFs alongside Solana, Litecoin going live that we saw. When you look at the first, not even month yet of success, what does this look like for you guys? Are you guys pleased with this? This significantly outperformed Litecoin's $1 million debut. So what do you think it was that made you guys do so well?
Yeah, I think that the being the third asset after Bitcoin and ETH to have the SEC approve for an ETF, and now having that asset trading on the Nasdaq certainly is validation of the network. It's something that we're really excited about because
Yep.
it does open up new avenues for access to HBAR and
Mm-hmm.
to investing within the Hedera ecosystem. And so that is an incredible new tool that is available to the ecosystem to broaden the market participants. Now that
Yep.
there is a public ETF in the United States, alongside many ETPs that are also offered in Europe. And this, of course, is through the Canary Capital offering here. There are new market makers. There are new market participants in terms of sell side coverage. So we're really quite excited about the expansion of the market and the user base, and those covering and researching Hedera. Upon the ability to research, I think everybody is always quite surprised as they look under the hood in terms of the activity and the number of applications that have
Mm-hmm.
been deployed today. As an observer of the market, to see that the inflows have been continuing. I think there have been about 6 days now of consecutive positive inflows. I believe the AUM is in the 60s and approaching 70 million. So there's been quite a positive response from the market over the last the first week of trading.
So first week, HBAR ETF had absorbed a little over 44 million in net inflows. So that brought assets where we are now, closing in on 70. So this has all been, I think, one of those things that a lot of people had anticipated for quite some time. This being the first altcoin, this is a big deal because this is kind of a watershed moment for not only altcoins, but the Hedera ecosystem. When you think about that and where Hedera is today, especially with the potential of multiple HBAR ETFs that would create a little bit of competition, how do you see this playing out in the next few months?
So I definitely expect there to be additional ETFs. Certainly, Grayscale has filed one that is on the nearer term horizon.
Yep.
There are a number of different basket ETFs that are out there with more additional single asset exposure to HBAR. Um, so I could expect that trend only to continue and accelerate. When it comes to more and more issuers, it's new exchange venues. Of course, the Canary ETF is on Nasdaq. I would expect other exchanges to be supporting some of the ETFs for other issuers, and the effect of having asset managers now promoting new products is a real multiplier effect for the awareness. And from the
Yep.
Hedera Foundation, that is one of the key drivers and missions of the foundation is to grow the awareness of the technology stack, of just how powerful Hedera is for many different applications, but certainly those that are focused on the enterprise use cases are near and dear to everybody's heart because of the power and scalability of the Hedera network, able to service the aspirations of an individual, but all the way up to Fortune 500 companies, which is what you get with an enterprise grade
Right.
infrastructure that is being run by Fortune 500 companies.
Do you think that's being recognized by investors? Because a lot of times we see, different IPOs who come on the scene. We see now ETFs, I think, will be the new flavor of the month when it comes to a lot of the crypto projects. Do you think investors, traditional finance investors, understand enough about what's happening in the Web3 space, in the enterprise application side, for them to say, okay, Hedera is a good play. I'm going to go this route to hedge against Ethereum or Bitcoin or Solana.
Well, I think the inflows are certainly an indication that the answer to that is yes. I expect it only and hope to see it only grow. There is a lot of familiarity that an equity investor or research coverage already has with many of the governing council
Yeah.
institutions that are operating Hedera. I think that the ETF now fits more squarely within the tech verticals that many of these investment research firms already have. And so they are now in place really to begin their education journeys. Many of them have maybe done so on a personal basis, but now professionally being able to say, I can cover this asset, I can cover
Yeah.
this space. And the foundation is very much here to help with along that learning journey. But I do believe that there will be more and more coverage of the applications being built on Hedera.
As asset managers start to deploy into this category, there's a lot of questions going on. I know we talk to a lot of them, as analysts that are trying to understand where crypto ETFs in general are going. Obviously, you have the Solana and the XRP ETFs that launched. Bitwise with their BSOL, this recorded almost 417 million in inflows, which was I guess the number one crypto ETF by inflows, even beating the Bitcoin ETF in the short run.
Mhm.
So, do you think that is a indicative of the cycle timing, or do you think it is more indicative of traditional now asset managers and investors saying we're much more comfortable with these now, so we're ready to deploy?
Uh, I think it's somewhat of a combination of the two. Certainly, the awareness of the assets grows with these product launches, so there's a
Yeah.
considerable marketing component here. I would believe that the access via new venues, whether that's a online brokerage or other means by which now you can place exposure to Hedera and through HBAR in your 401k or IRA. These are incredible tools that I think retail individuals access,
Yeah.
and they're usually the first movers. and we see more and more institutions being enabling this for their client base. And so I think it's a, it starts with an educational component, and then it expands as the institutions begin to enable distribution. But we're already seeing that very quickly because of the success of the Bitcoin and Ethereum ETFs, that the openness to engage with the likes of HBR, which is the Canary
Right.
ETF, have been there.
Well, okay, so you got a couple of things that are happening right now. Obviously, Solana experienced almost a 20% downturn recent weeks, down 30% in the last month, and this is despite the ETF success. Then you compare to what's happening with the announcements coming in from Swell. This, of course, has been executives suggesting that XRP would bring, significantly higher and bigger pools of liquidity, primarily because of institution orders. When all this is happening, how does Hedera differentiate itself in this space right now? Because it's crowded, but it's crowded with very quality products, very quality assets.
And
How do you guys
that is
differentiate?
part of the recognition that I think it occurs with the stamp of approval from the exchanges, from the SEC, from all the different parties that bring these products to market.
Yeah.
Now there are generic listing standards that may make it easier for other assets to follow suit.
Mhm.
But the feedback loop that occurred with the 19B4 filings that Canary went through with the SEC to comment and provide additional disclosures to investors, it was quite robust from what I understand, and that's
Yeah.
that's I think a validation for the strength of the network and the applications that are being built. As far as differentiation, I think Hedera continues to differentiate itself through both the use cases and the governance model, but ultimately the scalability. Hedera really is positioned extremely well due to the fact that it can vertically scale to a tremendous number of transactions for applications that really require enterprise grade infrastructure at the scale of a Fortune 500 company. And so that's, to
Right.
me, that's where we are as an industry today. It's institutional onboarding. It certainly takes time, but that's where a lot of the focus of the Hedera Foundation has been in terms of working with corporations and explaining how they can enter the Web3 space utilizing Hedera. Now, their volumes are massive once they are ultimately deployed,
Yeah.
uh, and you need to have infrastructure that is robust. What we saw with the AWS outage earlier in the last month is that there are many protocols that had significant outages
Yeah.
that were not able to continue to process transactions. So that really draws into question the suitability of some of those protocols for real critical or institutional grade infrastructure. Hedera was, unscathed and continued to perform as expected, in large part because of the robustness of the technology stack, the distribution, and lack of reliance on single points of failure like AWS and cloud services.
Well, I mean, you have to be fair. Is that it's also the flow of transactions on some of these chains out there that are more robust in the sense of there's just more of them. So I think that would compare in the future. I think the real question will be, to your point, is how do the top tier chains end up, kind of dealing with the onboarding of what could be a very mass migration of Web 2 coming to Web 3 and others, because businesses, obviously, with the Clarity Act on the verge of passing, that's going to open up a lot of opportunity of businesses we don't even know that will exist yet. That's the kind of innovation that we're really on the doorstep of. If you
Absolutely.
can, if you compare that with 155 crypto ETF filings, this came across 35 different digital assets. All these are pending in the SEC right now. This story dates back into September. That's how far out these have been. And there's been talk of potentially seeing thousands of ETFs launching in this space. When you think about that, do you think it's going to be a race to the bottom for some of these and it will just be a handful that will rise to the top? What's your opinion?
There is absolutely a first mover advantage. When it comes to ETFs, there is scale that matters. That is also the case as it relates to the underlying assets and the liquidity associated with those underlying assets. that you see trading on various venues, be they cryptocurrency exchanges or otherwise. And so, as there is as these generic listing standards enable more of these products to come to market, I think you will see a number of quite small ETFs. I think
Yeah,
you will see illiquid ETFs, but that's not necessarily abnormal. There are many asset classes that have ETFs that are
exactly.
small in scale,
Hmm.
that still enable new access points. So I think what it does ultimately is will enable more streamlined investment through brokerages and into 401ks and IRAs and other retirement or tax efficient vehicles. But that doesn't necessarily onboard institutions. And I think the institutional volume is still very much the driver and of where the future of transactions ultimately will come. In addition to device and AI related applications that are being built today.
Yeah. Well, I think the other point you're getting at there is the fact that we are seeing a new market basically being birthed right in front of us. If you think about it, sure, ETFs have been around a long time, some of the biggest ones out there, some of the biggest categories, but we have not seen them obviously in crypto.
Yeah.
That is a new animal. Um,
They
you
are
look
also
at,
needed in
go
some
ahead.
capacity in terms of the not all the ETFs immediately are enabled across all the various brokerage platforms. They
Yeah,
can be gated, and so um, it'll be interesting to see which products as they come to market the exchanges ultimately enable and approve, because you have to have the Nasdaq or New York Stock Exchange or other exchange agree to list the asset. So
yeah,
there are still hurdles that need to be overcome. The listing standards doesn't just magically enable every asset to be approved. You have to have the asset managers that are willing and a desire to bring these products to market because they feel that there is the economic interest to do so. So I wouldn't expect it to be a immediate flood, but I do expect that higher quality assets will come in a variety of different products, and that those will continue to bifurcate the market
yeah.
of those that are robust, those that are successful, those that are adopted by the industry and have real use cases, with those that maybe are not of the same caliber.
Yeah, for sure. Well, and this is kind of the model that has been living in the ETF world for quite some time, is that you get high quality use case scenarios or companies that and or industries and sectors that have been very effective in what they're doing, which drives, revenue opportunities, all those kind of things, which of course drives price on the ETF. So it is looked at a little bit differently. I want to kind of compare the difference between a Bitcoin ETF, an Ethereum ETF, because you look at this right now, there's not a lot of ETFs out there that are actually solving some of the big challenges, okay, in terms of the products. For you guys, it's enterprise adoption, which is usually longer. It takes a lot longer for enterprise adoption to occur, but in the long run, it's more sustainable. So, how does that apply for you guys in a future 5 years from now, where we're going to see blockchain everywhere? Where will Hedera be, and what do you think about the ETFs helping to solve, and what will it do for you guys?
So I think there are two sort of classes here. You have the digital gold narrative as it relates to Bitcoin and the Bitcoin ETF as a store
Sure.
of value, that is quite different from infrastructure. And
Yeah.
Hedera is really very much a play at infrastructure that is enterprise grade and scalable. And so, as I look into a crystal ball, where do I think we'll be? I expect that there to be a pervasive adoption of the technology stacks as core infrastructure for a variety of different services. Certainly, the financial markets is a big focus of ours, but enterprise, supply chain, AI, all of those are very valid and being adopted today. And I would expect that the investor appetite to provide the what looks like the picks and shovels for our industry is now
Mhm.
more accessible to their portfolios, and so allocators are able to access the infrastructure layer
the market.
Yes, I think that's really going to be the watershed moment that everybody's going to be looking at when the infrastructure is so adopted that it's under the hood, that you don't have to be aware that it is being that a good service is being
Yeah.
run on Hedera.
Yeah,
It
it's
will
the
just
internet.
the internet.
The internet, same way. Yeah. And you're right. I agree with you. There are winners though that are obviously internet related. If you just look at AWS, that whether that was a planned thing by Amazon or not, I think it was more out of necessity that they grew. But you look at the size of the ETF market right now. I mean, you're talking about what is it, 17 trillion globally. The U.S. right now represents over 10 trillion, and that was last year without all of what we're seeing now. And over 70% of ETFs now are under management inside the US. So this is a market that is ripe for explosion. My
Yes.
question to you is when you think about enterprise and what you guys can represent to this market, what would be the big takeaways for you guys in terms of things that are happening at Hedera right now
Mhm.
that will pay off in the years to come? What are you guys doing right now that says this is why we need to invest in this company?
Yeah, so it really gets to the ease of integrating the technology stacks as infrastructure for core services. And so we've been really working very hard to ensure that institutions which do move slower than a retail individual,
Yeah,
but when they do so, they move at scale. And so they are very diligent in terms of the way that they look at whether or not this technology stack is the right fit for their business. And I think that will really change a lot of the decision making process because they're less influenced by social media and more heavily influenced by the metrics such as the
yeah,
uptime, the scalability, the cost structure. So predictable low fees mean a lot for a CFO that's trying to budget for implementation of a technology.
yeah,
Regulatory compliance means a lot for a financial institution that's ensuring that their regulated business remains operational and they are not fined due to the deployment of a new technology for their existing business. So these really do matter and they're table stakes. I think that's where we've had a lot of focus. Similarly, it's not an immediate transition. There are going to be times when the database infrastructures are going to be both in a legacy centralized version and then in a digital twin. And I think
yeah,
over time, you're going to see, the scale begin to tilt more and more towards a digitally native and Web3 infrastructure. But having the ability to have interoperability not just between blockchains, which I think a lot of people think about today, but
sure.
actually with the legacy systems that are the plumbing of most of the financial markets today. That really is what is going to be the biggest enabler because whether you're a financial institution or a client of a financial institution, meaning an enterprise or other industry participant, you're relying on that plumbing, and you can't afford downtime for the operation of your business. And so you
Yeah.
have to retain the redundancies of legacy systems as you onboard a new more efficient, more cheaper, faster, better solution.
Well, and you hit on it right there, and that is the Web 2 to Web 3 conversion, that there is going to be kind of a intermediary in at least in the short term, but eventually it's going to fall into kind of the racehorse category. Who's going to be the fastest ones out there?
Yes.
After we see the full convergence, there will always be laggards in the industry, but the leading companies will have made the shift. The
Mhm.
future of enterprise blockchain, especially in regulated markets right now, where do you think that is in 5 years?
Well, I think to your point, the starting gun only really just went off for
Yeah,
institutions, right? And so now, with the U.S. signaling that enterprises can engage with this technology without the fear of
mhm.
a hard-handed regulatory environment, now there is the ability to engage, and only products really enable
Lost you again.
So where are we in 5 years? It's really a question of greater adoption. I think it's in addressing markets in a more global manner that enables new sources of revenues for
Hmm.
businesses. Because
Yep.
the incredible thing about Hedera and this industry is that it does not view the world through the lens of geographic divisions and
Yep.
maps. And so that is a larger addressable market, both from an individual perspective, from a corporate perspective, but increasingly with AIs and devices driving transaction volumes. And what will be exciting is that there will be more institutional analysis of how networks are ultimately valued. And I
Yep.
think value investing will really be coming into this industry in a big way.
Well, and with the implementation of AI, we're going to start to see tools that will help isolate that quite a bit. So I'm excited about where this is going. Obviously, we've looked at this space for a long time from a technology standpoint that kind of flows over into the investing side of things. So I think we are in the right place at the right time, and the markets are just getting going. Greg Bell, it's been great having you on the show today. Thanks so much. Again, thanks for tuning into this. I know this was a longer episode, but hopefully it gave you a full understanding of where the ETF market is, why it's so important to XRP, why it is so important to crypto, and more importantly, why it's so important to adoption. This is the next layer of adoption that I think traditional finance, gets a little bit crazy because I think we will see less retail moving into some of the more moderate projects out there on crypto. Sure, there will be degen activities, but I think we'll see a lot flowing into the ETF side of things. And obviously, the institutional will continue to push price. Price will follow with retail. Retail follows where the markets go. So stay tuned right here. If you're not subscribed to the channel, make sure and do that right now. Just hit that link down below. Of course, if you guys are not following me on X, I want you to do that. It's just at Paul Barron. Hit me up on the DMs. We're always looking for great interviews. Let me know who you want on the show next, and I'll try to get them for you. Take care.